Welcome to this explainer on management information. Today, we're taking those standard accountancy theories and transforming them into a super practical toolkit for your career. We're going to trace the really fascinating journey of how a raw number actually evolves into a powerful business decision. Okay, let's look at our roadmap for today. First, from data to information. Second, the accurate framework. Third, planning, control, and decisions. Fourth, the basics of costing. And finally, number 5, cracking the coding systems. Let's dive right in. Section 1, from data to information. So, it's absolutely crucial to ask ourselves, how does a simple digit on a page actually drive a multi-million-dollar business forward? Seriously, think about it. When you see a 50-cent entry in a ledger somewhere, how does that translate into a company deciding to open a brand new factory or maybe shut down an entire product line? Well, the crucial point here is that data is just the unrefined raw material. Raw facts, figures, measurements. Information, on the other hand, is what you get when you process that data, so it actually means something to a manager. It's literally the difference between handing someone a stack of thousands of unorganized receipts versus handing them a single, clear chart showing that sales dropped by 10% this month. The raw material was processed, and boom, it becomes meaningful insight. Moving on to Section 2, the accurate framework. Once we've got our information, we need a reliable way to test its quality, right? The accurate framework is an absolute must-know memory hook for this. It instantly helps you evaluate if your information is actually useful. So A is for accurate, figures got to add up with no mistakes. C is for complete, you need all the relevant info. Now the second C is super crucial, cost beneficial. It definitely shouldn't cost you more to gather the data than the benefit you actually get from having it. Moving on, U is user targeted, R is relevant, A is authoritative, T is timely, and E is easy to use. Honestly, if your report hits all these points, it's totally golden. All right, Section 3, planning, control, and decisions. In the real world, managers rely on good information to constantly cycle through 3 critical steps: figuring out where to go, choosing the best path, and then checking if they're actually staying on course. Planning is all about establishing your objectives and strategies. Then, decision-making means choosing between various alternatives, like, say, deciding whether to buy a shiny new machine or just repair the old one. And finally, control is the action of monitoring those results to keep the whole operation on track. To breach that gap between planning and control, managers use a budget to set their expectations, and then they track variances to quickly spot and fix any issues. Think of a budget as your financial roadmap for a future period. But let's be real, reality rarely matches the plan perfectly. Whenever the actual numbers stray from those budgeted numbers, we call these deviations variances. Finding these variances early, that's exactly how a business avoids a massive financial disaster.
This brings us to Section 4. The basics of costing.
Now we're stepping into the engine room. You absolutely have to remember the distinction between what we're trying to cost, which is the unit, and where we actually collect those costs in the business, which is the center. Think of a cost unit as the ultimate product or service itself, like a pair of shoes or a night in a hotel room. A cost center, though, is more of a building block, like a regional office or a machinery department. It acts as a collecting place for overheads before they're analyzed further and finally attached to those cost units. It's fascinating how the production of something as simple as a pen breaks down into really tangible elements, like yellow plastic and machine operator wages. This approach is what we call a classic unit cost card. By identifying the exact costs of, say, the red ink, the little metal ball at the tip, and the manual assembly staff, you can calculate the precise total direct cost of manufacturing just one single pen. It's like a giant puzzle coming together. So this means you can trace direct costs straight to the actual pen in your hand, while indirect costs, like the factory's electricity bill, have to be shared across everything that factory produces. Direct materials and direct labor, easy to trace. But indirect costs, which we also call overheads, are notoriously the biggest headache for accountants. I mean, you can't exactly measure how much of the factory supervisor's salary went into that one specific pen, right? So you have to find a way to apportion it fairly. And because every business is different, they handle this in different ways. A tailor will use job costing for a custom suit, since it's a one-off item. But a factory pumping out identical pens, they'll use batch costing for that run. Then you have process costing, which is for continuous, indistinguishable mass production, like giant vats of yogurt or oil refining. And finally, if there are no tangible goods at all, like a night at a hotel or a stay in a hospital, we use service costing.
And finally, Section 5. Cracking the coding systems.
We have to organize this entire universe of costs, and it can be notoriously tricky, so keep this in mind.
Hierarchical codes drill down into increasingly specific subsets, whereas faceted codes let you search by multiple, independent attributes at once. For example, in a hierarchical code, a 3 might mean screws, and 32 means a subset, like round-headed screws. But in a faceted system, the first digit might be the item type, the second digit the material, and the third the size. This is a real game changer because it allows a user to instantly pull up, say, all brass items across the entire inventory just by searching that one specific facet.
There's a clear contrast in how these systems work. A rigid numerical structure meticulously allocates costs to exact departments. This is so different from mnemonic codes, which just rely on easily memorized letters. A precise 4-digit numerical code might use the first digit to lock in the department and the last 2 digits for the exact materials used. On the flip side, mnemonic codes, like using LAX for Los Angeles, just rely on human memory. Coding absolutely facilitates data processing, but only if you pick the system that actually matches the complexity of your business. As we wrap up this explainer, I want you to consider how applying these very structures to your own personal finances could transform your raw spending data into incredibly powerful strategic information. Could treating your housing as a cost center and maybe creating a faceted code for your groceries give you ultimate control over your budget? By mastering how raw data actually becomes useful information, you hold the keys to driving your own success. So the real question is, how will you code your life?